Adam. Nice to see you. Welcome.
Sarah, always good to be with you.
So clearly some progress on the revenue side of things and attendance in the movie theaters, but you're still burning cash and not profitable yet. Why?
Well, let's talk about the progress first. There was something called COVID-19, you may recall, that shut all movie theaters 2 years ago and basically stopped the flow of movies to theaters from Hollywood studios. We've been marshaling a glide path to recovery ever since. And as you said, we just reported the best first quarter in 2 years. We saw progress, considerable progress in 2021. And then, just this weekend, we had the biggest movie of 2022 opening in Doctor Strange. When we look at the movies that are coming, including Top Gun Maverick just a couple of weeks from now, and Jurassic World Dominion right behind that, and what we think is going to be hit after hit after hit, we're actually quite optimistic that the box office is coming back, that theaters are coming back, and that's the news of AMC that we reported in the last 24 hours.
So I guess another way of asking is, what level of attendance, Adam, do you need to see to not be burning cash?
Oh, I suppose if we get to a point where we're 10 or 15% down in attendance from pre-pandemic levels, we should be in pretty good shape. When you look at where we were in the fourth quarter of 2021, we got within 25% of pre-pandemic levels. And from an operating cash standpoint, we were break even in the fourth quarter. Yeah. But of course, we're not trying to get to operating cash break even. We want to be robustly profitable again. And as I said, I think we need to see attendance levels rise to 10 to 15% of pre-pandemic norms. But I do think that's a doable thing in our future, sometime in 2022 or 2023.
Adam, on the call, you addressed, as you often do, the retail shareholder base in your stock, and actually said, I thought this was interesting, that some of the feedback that you've been getting specifically on social media may be well-intended, but some may be hurled at us with an intent of actually harming me or the company. And it was the first time I really heard you speak out against some of the enthusiasm or mania around your stock. So explain what you're experiencing and how concerned you are.
Well, look, Twitter is an anonymous medium. You should read my inbound Twitter feeds. But look, on balance, the enthusiasm, the passion for AMC amongst our retail shareholders has been stunning to us. It's so much more on the side of being constructive. I don't want you to read too much into that commentary. I'm very fortunate to work for this shareholder base. They love our company. They're rooting for our company, and we appreciate their support.
Even with the stock down 80% from the highs?
Well, it depends where you want to look, right? 15 months ago, we were trading at $1.91 a share. And it is true that if you look at calendar year 2022, our stock has fallen. It's also true that the market has fallen. These are very uncertain times. And there are a lot of other companies, really wonderful companies. Your own, Comcast, which owns NBC Universal, is off 20%. Disney's off 30%. Netflix is off 70%. Amazon just bought MGM Studios, and it's a streamer. It's down a third this year. It is a tough market in 2022. That shouldn't be a surprise to anybody who watches CNBC.
No, but I think